Thanks so much for joining us today here on America's Retirement Headquarters, home of the Retirement Guys Formula and America's Medicare Associates with Nolan Baker, Scott Kirshner, and Chaz Price. 419-794-3030 is the phone number. It's 419-794-3030. Online, arhq.com. I've heard it said more than once, it's not what you make, it's what you keep. And I can't help but feel like that's where good tax planning comes into play. So let's talk about everybody's favorite thing here. Taxes, of course. How can you help formulate a tax strategy into someone's retirement plan?
It's a great question. I think, this time of year becomes even a more popular time when people are thinking about taxes, with getting their taxes filed. We think about the good versus bad tax planning habits. I'd say right off the get-go, one of the bad habits that I think a lot of people do is they file their federal taxes for last year and they box it all up and they put it away and they say, "Whew, I'm done with it. It's over." Whether you're doing your taxes on your own, whether you're going to a tax preparer or utilizing a CPA, in that situation, a bad habit is thinking that recording the history of what already happened is a planning strategy. It's not. What we're trying to talk about right now is the important time where we can take last year and the previous information and let's say, what can we do in 2023 to try to minimize the taxes that you pay? One of the things that we came up with the tax saver checklist, and we've identified roughly 25 different things in areas that are talking about ways to look for ways that families can minimize taxes. It's things like what we had talked about in a meeting earlier this week with Dan and Barb. And, for Dan and Barb, we were saying, hey, you have all of this taxable money that you're not using right now. It could make sense to move some money over into the tax-free category. And here's 3 different choices. It could be like what we talked about with Chris and Sarah, and we talked about the fact that, roughly 53% of their money was in the tax-deferred category, and at some point they're going to be forced to take required minimum distributions on money that they don't even need, but, by doing so, they're creating this tax time bomb for their family. There could be a much more efficient way by proactively looking at it and taking a strategy over the next 5 to 10 years. So, when we're talking about good habits, we're talking about how do you take that information from the past, apply it to this year and say, how can we minimize the taxes? Again, the tax saver checklist is something that we can go over with folks. And another thing that we have is we have that event that's coming up. It's another popular event. It's called Wealth, Wine, and Wisdom. That event is coming up. It's May 9th and 10th. It's over at Urban Pine Winery, but we're going to be talking about not only taxes, we're going to be talking about, how to minimize your healthcare expenses. We're going to be talking about ways to reduce the amount of money that you pay for you and your loved ones, ultimately in creating the ultimate estate plan. And all of this kind of goes in hand. And when you think about it and you're thinking about your relatives, Uncle Sam is probably one relative that you want to give as little as possible to.
Sure. Yeah,
and
definitely.
even keeping more in your pocket, there are things that you can do today to keep more in your pocket. So again, examples of like what we were talking about with the folks of utilizing money that they're paying taxes on every year, even though they're not using it, move it into different strategies can make a lot of sense. Mm-hmm. What are your thoughts as far as, looking at things like Roth IRAs? What are you thinking about, the changes? There's new changes within the Secure Act for how you can make contributions or company contributions goes in for 401ks or IRAs. What are your thoughts as far as, good versus bad tax planning habits?
Yeah, Nolan, I think taxes really for me are one of the bright spots of the business. I know a lot of people don't like, a lot of financial advisors shy away from taxes, but it's really one of the areas of discipline that I've chosen to focus on, because I think taxes are where you can go from rich to wealthy. I mean, I think the difference there between investment management, just kind of, investing assets, and then actually considering the tax component, I think that's what I refer to wealth management is. And so when you're into some of the higher tax brackets and some of the, maybe higher net worths where taxes are really starting to eat into your bottom line there, like what we talked with the clients just before the meeting today. Taxes are a big concern of theirs. So this is an area where I think financial planners, if they're not talking to you about your taxes, I'm not saying that they should be giving you tax advice, because I'm not a CPA. I'm not, giving you tax advice, but we can generally give you direction, and we can come up with a plan to mitigate those taxes as much as possible. One of the ways is that we help our clients keep very accurate tax records. So obviously all of the statements, all of the tax planning documents are available to our clients. We can provide those to you and to your accountants to make that process a little easier. But just keeping track of the records of the cost basis of some of your investments, of any loss carry forwards. So if you've had a loss maybe this year that you've incurred as a result of the market, and not knowing what that is and what the implications of it in the future are, is, I think, a bad tax habit. Also, like you mentioned earlier, Nolan, having some tax-free, having some tax-deferred, having some taxable money. The concept of diversification, I think, applies to taxes like it does investments, because you don't know what your situation is going to be in when you may want to retire early. Maybe taxes are going to go up. Maybe even taxes end up going down. Nobody knows. But having a mixture of tax plans, tax status of investments is, I think, a good habit to get into. Also, ignoring tax loss harvesting. We mentioned that as an observation in a review that we had with a potential client, that on their taxes, there were no losses or gains realized. And so you want to make sure that you're taking advantage of opportunities to offset gains with losses. We call that process tax loss harvesting. Also, charitable giving. We have clients that are gifting charitable donations right out of their checking account when they could be giving those distributions from their IRA tax-free. So it's the marginal stuff. Again, it's not, you've heard the term, the tax tail wagging the dog. It's not that. We're going to be very disciplined, very detailed. We're going to have a financial plan. But on the margins, I think that's where we can take you from good to great.
So let me ask a question, because you described me right to a T at the beginning of this segment. I do my taxes, and I box them up, put them away, and I'm like, whew, another year done. Because, and we mentioned before, I get so worked up over tax season, it's just me, right? So I'm the perfect client for this. Mm-hmm. I'm the perfect person that needs more guidance on this. So what do you tell me? How do I take advantage of this? What are the next steps for me? And anybody out there like me, what do I do? Do I bring in my tax records and all my investment accounts? Tell me how that workflow works.
I think it starts with having a conversation, and I think becoming educated about what the choices that are out there. I think it was the Honorable Learned Hand, the judge, who said, there's two systems of taxation, one for the informed and one for the uninformed. Mm-hmm. I know when I was recently at a conference and I was down in Atlanta with some financial advisors, one of the advisors had walked up to one of the other advisors I was talking with and handed him a bottle of wine and said, "Hey, thanks for that advice on some real estate that I was dealing with. It saved me a bunch of money on taxes because I didn't know that strategy. I ran it past my CPA. My CPA loved it, and it worked out great." And so, everybody was able to learn based upon that because he got that education. It would be the same. So two takeaways, I'd say. Number one is, if you want to go through the tax saver checklist, I am a big checklist driven person. I like to make sure we cross the T's and dot the I's so we can take those taxes, take a look at them, say, what did you apply last year to your situation, and what could be applied to this year and for the next 5 or 10 years, or even for your family? What are the things that you're not crossing the T's and dotting the I's? Worst case scenario, you find out you've crossed all the T's and dotted all the I's. Then I'd say put the taxes away, grab the golf clubs, and go outside and start enjoying the nice weather that we have. The other thing that you can do is, if you want to come in a more relaxed setting and you want to learn about the strategies, what are the things that are on the checklist, what are the ideas, I would say come out to that event that we have coming up at Urban Pine on Wealth, Wine, and Wisdom, because we will be talking about taxes. Scott, what's so important about this is the decision that you make in taxes impacts everything else.
Sure.
So, what a poor job it would be for me or Chaz or on the investment side to help somebody make some extra money on their investments to only turn around and give more than they should have in taxes.
Sure.
What a waste of planning it would have been to help somebody make more money to turn around and only find out it cost them double or triple what their healthcare cost was. That's the difference between good versus bad planning habits, is taking a look at how does this all fit together in my unique situation and making sure that it all works together, because all the decisions that you make are going to impact one area versus another. That's how you get to really having a good tax planning habit. And so if you're not getting advice right now, if somebody just did your taxes and they didn't talk about running a tax roadmap for 2023, that's exactly what we can do. And Chaz, as you pointed out, we're not CPAs. We're not trying to tell you or sell you tax planning services. We think there are great tax planners out there. They're great CPAs. But if you're not getting that advice on how to keep the government away from your money, it's time to have a conversation about what you can do different. And then let's get you out on the golf course when you have more money where you can spend time on the boat and with your family and keep everybody and keep, more importantly, the government away from your money.
The number is 419-794-3030. Very detail-oriented. America's Retirement Headquarters love their checklist. Maybe you're a little less so like myself, but that is okay, letting them figure out a plan, not just for the taxes coming up this year, but, the 20, 30 years you're going to spend in retirement, how to keep Uncle Sam at bay. 419-794-3030, or go to the website, arhq.com.